Is Tesla a bubble about to pop, or is it the most undervalued stock of the century? You'll hear both, but the truth is a lot more complicated. Today, we're cutting through the noise, leaving the hype and the hate behind, to give you a real analysis of Tesla. Forget what the bulls and the bears are screaming, let's look at the facts. First, let's address the elephant in the room. Is Tesla a car company or an AI company? This is the central question, and honestly, it's the wrong one to ask. The bears look at Tesla and see a car manufacturer. They compare its production numbers and profit margins to Ford or Toyota and scream overvalued. They point to its price-to-earnings ratio and say it's astronomical for an automaker. And you know what? If Tesla were just a car company, they'd be absolutely right. Making cars is a brutal, low-margin, capital-intensive business. Judging by those metrics alone, the stock price makes no sense. On the other side, you have the bulls. They say Tesla isn't a car company at all. It's an AI and robotics company that just happens to sell cars for now. They're betting on a future of self-driving robotaxis, Optimus bots revolutionizing labor, and solar energy dominating the grid. For them, the car business is just funding the real mission. They believe the market hasn't even begun to price in this world-changing potential. And if they're right, today's price could look like an absolute bargain in a decade. So who's correct? Neither, and both. This is the fundamental misunderstanding of Tesla. It's not one or the other, it's a hybrid. It's a high-growth, high-tech company operating in one of the toughest, most traditional industries on the planet. This dual nature is what makes it so hard to value. You can't just use automotive metrics, and you can't just use pure tech startup metrics. You have to blend them. Let's break down the business as it is today. The core is still automotive. Tesla has achieved something incredible, making electric vehicles desirable and profitable at scale. They have a massive lead in brand recognition, charging infrastructure with the supercharger network, and manufacturing efficiency, thanks to innovations like the gigacasting process. This isn't just hype, it's a real, tangible advantage. Their margins, for a long time, were the envy of the industry. They proved that you can make money selling EVs. This foundation is solid, and it's what gives them the cash and the credibility to pursue their more ambitious goals. But that automotive dominance is under threat. And this is a real risk that many bulls tend to ignore. Every single major automaker is now gunning for Tesla. From Ford's Mustang Mach-E to Hyundai's Ioniq 5, the competition is getting fierce, and frankly, very good. In China, companies like BYD are not just competing. They're outselling Tesla in certain segments. This competition erodes market share and puts pressure on prices and margins. We've already seen Tesla cut prices multiple times to maintain volume. The days of having the entire high-end EV market to themselves are over. That's a fact. Now, let's talk about the future, the stuff that gets the bulls so excited. The biggest promise is full self-driving, or FSD. The vision is a fleet of millions of Teslas operating as autonomous robotaxis, generating recurring revenue for their owners and for Tesla. If this happens, it's not just big, it's revolutionary. It would transform transportation and urban life. The potential revenue from a software service like that could dwarf car sales. This is the core of the AI company argument. However, if is the biggest word in finance. The reality is that true. Level 5 autonomy where the car can drive itself anywhere, anytime. With no human oversight is an extraordinarily difficult problem to solve. Tesla has been promising it's just around the corner for years. While FSD has made impressive progress, it's still a driver assist system, not a true autonomous one. There are immense technical, regulatory, and legal hurdles to overcome. Will they solve it? Maybe. But how much of that maybe is already baked into the stock price? That's the billion-dollar question. A lot of the current valuation is based on the assumption that they will succeed. If they don't, or if a competitor like Waymo gets there first, that part of the valuation could evaporate. Then there's the other big bet, the Optimus robot. A humanoid robot designed to perform boring, repetitive, or dangerous tasks. Again, the potential is mind-boggling. It could solve labor shortages and fundamentally change the global economy. It's a sci-fi dream that Tesla is trying to make a reality. But we're in the very, very early stages of this. What we've seen are prototypes. We are years, maybe decades, away from seeing millions of Optimus bots working in factories and warehouses. It's an exciting project, but from an investment perspective today, it's pure speculation. It's a call option on the distant future. Let's not forget the energy business Solar Roof and Megapacks. This is a real growing business, but it's still a small fraction of Tesla's overall revenue. It complements the mission of accelerating the world's transition to sustainable energy, but it doesn't currently justify the company's massive valuation on its own. It's an important piece of the puzzle, but not the main driver. So, where does that leave us? Tesla is not a hidden gem. The market is intensely focused on it. Every piece of news is dissected. Its potential is widely discussed. You're not getting in on some unknown secret. At the same time, it's not a simple, overvalued car company. Calling it that ignores the very real innovation in manufacturing, software, and battery technology that gives it a significant edge. It ignores the optionality of FSD robotics and energy. The truth is, investing in Tesla is a bet on execution. It's a bet that Elon Musk and his team can navigate increasing competition in the car market, while also solving some of the hardest engineering problems in human history. The price you pay today for the stock is for both the established, profitable car business and a premium for the possibility that they will succeed in their futuristic ambitions. This means the real risks are not just competition. There's execution risk. Can they deliver on their promises? There's regulatory risk. What will governments do about self-driving cars? And there's key person risk. The company is incredibly tied to Elon Musk. His focus, his decisions, and his public persona have a massive impact on the company, for better or for worse. So, the next time someone tells you Tesla is obviously a bubble or obviously a bargain, you'll know they're oversimplifying. The reality is far more nuanced. It's a high-stakes, high-risk, high-reward story that is still being written. It's a company that is simultaneously a market leader and a moonshot bet. And that's why it remains one of the most fascinating and misunderstood stocks on the market. Spegs for watching. This was a deep dive, so let me know your thoughts in the comments below. Are you a bull, a bear, or somewhere in the messy middle like me? And if you enjoyed this analysis, make sure to subscribe for more content that goes beyond the headlines. See you next time.